Good evening, guys. I hope everyone can hear me. So today we're gonna just do a market breakdown. As we know that every Sunday it's a market breakdown. We are going to analyze a few pairs and then two indices, even a metal, so that we can see tomorrow what is going to happen. So let's just begin to start with the currency, to analyze the currency. So as you know that always I'm using a top-down analysis every time when I analyze the market. I'm starting from the bigger time frame so that I can understand what is going to happen for the coming days for long term, so that once I'm trading, I'm not gonna just go against the market. Even when if I'm buying, I will be buying if the overall structure of the market is a sell, and then I'm buying, I will be know that what I'm doing, I'm selling, I'm buying the corrective movement. So let me just do an example so that people, they can understand what I'm talking about right now. For example, let's just talk about this one. Let's just talk about this one. I'm gonna just put any trend line so that I'm just making an example so that everyone he can understand what I'm trying to explain, not what I'm explaining, so that everyone will get the point. So as we can see, the overall structure of the market here, it's a sell. As it's a sell, we know that if we are buying on the selling a trend, on the downtrend, we know that we are buying the corrective movement. We are buying the corrective movement, and then we are not supposed to even go against the market. But it's not like you are going against the market. It's just you see an opportunity that you can grab some profit here. But for my main strategy, the strategy that I'm using, rather I must wait the market to talk. I must wait the market to react. After the market to react, I will know that it's the right time to buy. For example, the market is moving like this: impulsive and corrective, and impulsive and corrective, and impulsive and corrective, and impulsive and corrective, and impulsive. So if I'm trading on that level, that means what I have to look at, I'm not supposed to even take this opportunity for buying opportunity, because of any time the market it can push to the downside. I have to always catch an impulsive move. If you can check, once you catch an impulsive move, you'll always be in a safe side. If you can just check very well, and then just check very well. If you are following the overall structure of the market, you're not gonna just go against the market. Even when you're holding a trade, sometimes the problem that we are facing for South African people, we are facing the load shedding. Even when you take a position, selling opportunity, the market will sell. Once the market make a pullback, it will push to the downside again and make another pullback and push to the downside again. Why? The reason why is because of the overall structure of the market. It's a sell. So that's why I don't like to go against the market. So I hope my point is clear. So let's just begin with the British pound to analyze the British pound so that we can understand what is going to happen for the coming days or during the week, because of it's very, very important for market breakdown. It will help you to understand, are you on the uptrend or are you in a downtrend? It's very, very important to understand that if you're taking a position, you must know, I'm taking a position, but the overall structure of the market, it's a sell or it's a buy. If you are taking the buying opportunity at the downtrend, that means you are trading the opportunity, the buying opportunity, the small opportunity, which is the corrective movement. That means you must be open-minded. You must be always be aware that anytime the market, it can reverse. So this is my highest point here on this level. This is my highest point. I'm recording this session. I'm gonna just post this session on my Telegram channel. Not Telegram channel, in my YouTube. So I'm gonna just send to you the link so that you can watch that market breakdown. So this is my highest level on the monthly time frame. As you know me, that always I'm analyzing the market from the biggest time frame so that I will understand for long term what is going to happen. So this is my lowest point. and then this is my highest point. I will be saying this is my major resistance, this is a major support level. As you can see, the market have been pushing to the downside, impulsive, correctively, and impulsive, and correctively, and impulsive, and correctively, and impulsive. So we're expecting the market to push to the downside until we approach this level, as we can see right now. So I'm going to just allow put a trend line from this point, because of it's very important where you put a trend line, where a point that you put a trend line is very, very important, because of if you're going to just put a trend line just to put it, you'll be saying that, hey, a trend line is not working. So it's very, very important. Once you are putting a trend line, you must know the point where you are putting the trend line. So as we can see, the overall structure of a British pound, it's a sell. This is what I see right now. As you can see, the market is just try to fetch this level and fail to approach that level. But if you understand, you will know that the market was not going through the trend line. The market was respecting the previous zone, because of always the market respect the previous zone. As you can see right now, always the market, it respect the previous zone. So sometimes you must be aware that sometimes the market is not gonna just go and fetch on the trend line and push to the downside. You must check the previous zone, because of where the previous zone is, where that we are looking the selling opportunity, because of always the market go and fetch the previous zone. As you can see, the market managed to give us impulsive and corrective like this, moving sideways, which is a ranging market. We call it a ranging market. And then after, the market just go and fetch the previous zone. Is where that will be saying, let's enter here, which is, we can call it a risk entry. We enter here to expect the market to give us another impulsive move. So let's just move to a weekly time frame to understand what is going to happen. What's happened on this GBP British pound? What's going on? Because of right now, we don't know what's going on the GBP. But if you can follow, if you check my analysis every time when I send the analysis, even when I send the signal, I analyze the market from the long term. I don't just analyze the market from for shorter time, because of I'm not going against the trend. I'm always following the trend. That's why if you can check my signal, you will see that even you can take a profit early, but you'll realize, you'll started to react, why I took a profit early. Maybe you took entry here and the market goes down. Once the market gives us a pullback, you started to close. And then you'll realize that the market is still pushing to the downside, aggressive. That's the reason why I don't like to go against the market. So our main point that we need to focus is this on this portion. That portion is very, very important to watch this portion, because of we want to understand what's going on. As it's either we are going to push the market to the upside, or it's either we are going to push the market to the downside. So this is, let's see what we are expecting. For now, let me just fix the trend line right now. This is a point that we are looking, and then even this point. And I'm going to just apply a trend line here and put it here. And take another trend line and put it here. First point, second point, it form a trend line. To have a trend line, you cannot have only a first point. First point, second point, it form a trend line. So as we can see, the market, it managed to move with the channel. After that channel, broken impulsive, but we'll realize that there are some other things that we cannot see on in the weekly time frame. But just to move to a daily time frame, we'll know that here it's not like the market is just moving impulsive like this. There is a corrective that was happening here. If you can check, even on this candlestick, a blue candlestick, you'll realize that the market was doing something like this, impulsive and correctively, and impulsive and correctively and impulsive. This is what you can realize that. But for now, there is nothing clear that we can see right now. Let's just move to a daily time frame so that we'll understand what's going on here. So this is what I was talking about. This, if you can check, just check very well. This is what I was talking about. This is what I was talking about. Impulsive, corrective, impulsive, corrective, impulsive, correctively, impulsive. Always the market, it doesn't move like always impulsive. The market is just inhaling and exhaling. The market is just giving you an opportunity to re-enter. So we started to realize that we have this level. We have this level where the market, if you can just be open-minded, you will realize that the market itself, it managed to give us a trend. If you can check impulsive and correctively on that level, and impulsive and correctively and impulsive, and the market started to create a highest level and push to the downside, you'll realize that the market itself, it managed to give us what? Head and shoulder pattern, to expect the market to give us another impulsive move to push to the downside. So what the main point that we want to understand, what is going to happen? What is going to happen for tomorrow? What we are looking to happen? So right now, I'll just fix the trend line right now, and I'll take it from here and I will put it from here. And then what we're going to do, I'm going to mark a previous zone, because of the market always respect the previous zone. There is no way that the market is going to move without respecting any previous zone. The market, it can move impulsive, but it have to come back from the previous zone where the market was retesting, or where the market was trying to respect that level. We have this level. If you can just check very well. As I told you, every time the market is supposed to go and fetch, go and respect the previous zone. The market, it just give us what? Impulsive and correctively, and impulsive and corrective. You're expecting the market to give us another corrective here, so that we are going to catch another swing move. We are going to approach this level. This is my expectation. So let's see, because of we still on the bigger time frame. So I have this level, this level. Let's just move to an H4 time frame. As we know that H4 time frame is where that we'll realize that we have the continuation pattern or the reversal pattern. So our expectation, what it can happen, I'm expecting the market to give us something like this, I'm just making a small prediction that what it can happen, so that we can catch another swing move to push to the downside. If the market, it doesn't give this channel, there are high possibility that the market, it can give us something like this. Push to the upside and reverse, and push to the upside and come back to the downside, and go and fashion, create a pattern and push to the downside. Any pattern that you can think about, the market, it can do that pattern, so that it can show you that me, I'm going to sell. Always the market is talking to us, but us, we are not realizing. We are not aware. Always the market is giving you, it's always, once you're looking at a chart, the market is talking to you. It's a communication. If you can, like now we are analyzing the chart, that means we are seeing, we are communicating with the market. We are communicating with the chart, because of the candlestick is our language. The pattern is our language. The candlestick, it can tell us that I'm going to reverse now. The pattern, it can tell you that I'm going to continue or I'm going to reverse. So that's my expectation, what it can happen. So I'm going to just do it like this. This is what I'm expecting. Let's just move to an H1, because of H1 is mainly used for entry point. So eventually, what I'm expecting the market to push to the upside, and then where we are going to catch a swing move to push to the downside. You'll realize that if I can just apply a trend line like this, apply a trend line, put on this point, and put it here. You will start to realize that there are high possibility that the market, it can do this and push to the downside, drop like this. And then there are any pattern that the market, it can give you here, it will give you a reversal. So you must know that this is a zone that you must always be aware that we buy the market at the zone. What I mean once I said the zone, I talk about the support and resistance, the supply and demand. Nothing changed. So this is my expectation. This is my expectation. So I was just doing a small prediction that you must be aware what it can happen and what it can happen. This is my expectation on the British pound. In a British pound. My advice to you guys, if you want to enter the market, because of Mokosi said that, no man, the market is going to reverse here. Don't immediately buy, because immediately once you buy, you are going to be a winning trade is going to turn into loss. What I mean once I said a winning trade is going to turn into loss, let me just do an example to you. Let me just make it an example to you so that you can understand what I'm talking about. So if Mukhosi told you that, no, the market is going to buy here, don't immediately, once the market approach that level, and then you immediately buy because of your winning trade is going to turn into loss. Let me just do a small prediction here. The market, it can do something like this. Something like this, and push to the upside like this. Me, I told you that the market is going to reverse here, and then the market do something like this. You see, immediately you already took a position here. Once you took a position, the market go and hit your stop loss. After hitting your stop loss, what's happened with your trade? Something is happening. You started to react, say, look at this thing. After it went to my direction now, it go against me, started to reject. And you find yourself on this level. The market started to do what? The market started to sell. The market started to sell, to push to the downside. You understand? So that's the main key, that you must relax. Don't think like say the market is going to reject here immediately because of you entering without any confirmation of the candlestick. The candlestick is our language, remember. This kind of candlestick, it's not like they will always give you this candlestick. They can give you even a doji. They can give you all those candlesticks that you know, to show you that I'm reversing here. And then you must check another pattern, a chart pattern. So this is my expectation. I'm going to send this setup on my Telegram. So let's just check another pair. Okay. I already did the analysis yesterday. I was live on a TikTok. So I end up doing the analysis. So let me just analyze even a Euro USD so that you'll understand. This is our monthly time frame. Let me put a watermark so that everyone will see. So this is our Euro USD on the monthly time frame. Remember, a monthly time frame we are using to overall the structure of the market. And a daily time frame, a weekly time frame, there are some other things that we cannot see on the weekly time frame. And then the daily time frame, there are some other pattern that we cannot see on the weekly time frame, but we started to realize that we have the pattern. And then H4 is where that you'll realize that we have the continuation pattern or the reversal pattern. And then H1 is main use for entry point, risk entry or reduce entry. It's a two entry that you must be aware. That's why even when you are trading, sometimes you'll realize that a mentor will tell you that he'll give you a signal. After giving you a signal, sometimes you realize that the mentor give you a signal and then be specific to you. Say, apply a risk management. That means that entry, it's a risk entry. There are high possibility that the market, it can still go and push to the upside. That's why mentor will tell you apply a risk management, and give you a bigger stop loss. So that's the reason why sometimes you'll realize that people, they will tell you about a risk entry and reduce entry. So this is my highest point. This is my lowest point, which is my major support, my major resistance. This is my major support. So if you can see, the market, they've been giving us impulsive and corrective and impulsive. And then the market, it end up moving, pushing to the downside correctively with a channel. You'll realize that what's going on, why the market, it was moving like this, because of always, sometimes the market, it show us that we are going to buy and the market sell. We are going to buy, the market sell. So the things that we need to understand where we are going to reverse, where we are going to continue and push the market to the upside. So on this channel is showing us that for the coming days, there are high possibility that we are going to find ourselves pushing to the upside like this. pushing to the upside because of it's a impulsive and correctively and impulsive. We are moving under support and resistance, under a major support and resistance, which is, I will be say, supply and demand. Okay. Okay, let's see now. Okay, right now, there is nothing that I can tell you. There is nothing that I can show you. There is nothing that I can lie to you and say, hey, what. If I can tell you something, I will be lying to you because of there is nothing that I can see right now. What I see that we're still on the downtrend. This is what I see. We're still in a downtrend. The market managed to give us moving sideways and give us another impulsive to create a new high, new lower, and push to the upside to go and fetch. But if you'll realize that the market was go and collect and fetch the previous zone so that we can catch another impulsive move to push to the downside. So that's the reason. The reason why the market it was reversing here is because of the market was respecting this level. But right now, there is nothing clear if you can just check very well. Where I will put it in my trend line. I will put it in my trend line here. Look at what's happened. I will put it in my trend line here. Watching this level. Look at what's happened. It doesn't make sense. There is no even explanation. That means I will be lying to you. But if you can see what's happened, the market was respecting the previous zone. If we can check, the market managed to give us impulsive and moving correctively like this, and give us another impulsive and push to the downside and push to the upside to go and create a double top and push to the impulsive to the downside and come back and the market to push to the downside. Remember, a new candlestick will open it today for monthly time frame. The candlestick that are going to open today is the monthly time frame, weekly time frame, daily time frame. Even a weekly is compulsory because of every week a new candle is opening. But a monthly time frame, it will be opening today. So you must be aware that sometimes you realize that the market it will buy after buying started to reject and push to the downside. So let's see what is going to happen. Let's move to a weekly time frame because of there are some other things that we cannot see on the monthly time frame, but on the weekly time frame, we started to realize the pattern. We started to realize where we can put a trend line. Okay. This is our focus. We are focusing here. So let's see, because of right now, there is a question that we need to ask ourselves. The reason why the market it was reversing here. Remember, go to the market to learn through the market. Don't go to the market like a professional because of it will humble you. So the reason why I say that, even I told my student that always you must analyze the market to check why the market was reversing there, because of immediately once you check the previous, it seems like you are back testing. So you started to learn to acknowledge, okay, the market was respecting this and this and this and this and this. Okay, let's see. Because of everything, it happened with a reason. Okay, we started to realize that there is a stronger zone that the market was respecting. If you can just check very well, every time once the market approaching some zone, this is a zone. Look at it, it's a stronger zone. The market was before, even if we can check previous, if we can go and check on the previous, the market was always respecting the previous. Look at here, there is a bounce here. The market managed to create even here. There is a bounce. Look at after the market approaching that level, the market is started to react from the previous, watching from the previous. Always the market respect the previous zone. If you don't understand, I don't know. If you don't understand, I don't know right now, because of always the market respect the previous zone. The market always respect the previous zone. If you can just check very well, look at. That's the reason why I said you get the buyers from the zone, you get the sellers from the zone. But let's see what is going to happen, because of the reason why I was checking here. I was just showing you so that you must be aware that where the market it was reversing, the market was respecting the previous, as you can see right now. It doesn't make sense. I'm not going to take it from here. I will take it from here. because of you are not supposed to force a trend line. We have this level. We have this level. We have this level. So right now, there is nothing. Always we see impulsive. But if you are open-minded, you must ask yourself one question. What I can say, the book is closed. Try to read a closing book. How you can read a closing book? Let me teach you. My question to you, or experience that I have, I said, for me to understand where the market it managed to make a pullback, I will realize about what? I will realize about the candlestick. As I told you that the candlestick is our language on the foreigners exchange market. I'm going to mark this candlestick. This candlestick, there is something was happening on that candlestick. Something was happening on that candlestick. This candlestick, it's a pullback. The market, it managed to go and fetch. You realize that what the market was doing, maybe there is something was happening like this. The market managed to go up and retest and give us another impulsive. This is how to read the book, the closing book. Let's move to a daily time frame. You see what I'm talking about? I'm not telling you the things that are not there. I'm teaching you the reality that it happened. That's why I wrote the book and I call it the book that exposing the secret of the market. The crazy book. I call it the crazy book because of that book is very powerful. It exposes, it is teaching a reality, what's happened in the market. So you see, this is how to read the book, the closing book. I think you acknowledge. So right now, we started to realize that the market was giving us another impulsive. The market, it managed to create a new lower here. The previous lower on this trend line, and then we started to realize that we have this level. We have this level. This level. Once we have this level, the market managed to give us another impulsive. After giving another impulsive, the market itself, it end up creating a channel. And then if you are open-minded, you'll realize that you can still trade on that channel, because of on that channel, you'll realize that you can find the pattern within the pattern inside of that channel. I don't know if you don't hear me. You'll never catch me. If you don't hear me today, I don't know, guys. So right now, what I mean, but it's fine. It's fine. The pattern within the pattern, I'm going to do it for the coming days. So right now, let me just take this one. So this is what I was showing you, that how to read the closing book. Okay. So we started to realize that there is something that was happening here. There is something that was happening here. The market itself, it managed to give us a push to the downside. The reason why the market it was pushing to the downside is because of the market, it managed to give us a pattern to reverse, to push to the downside. That's why I told you that always the market is talking to you. So right now we are here. Because of now, there is nothing that we can prove in. There is nothing that is clear on the monthly time, on the daily time frame. What I can tell you, that there are high possibility that we can still push the market to the upside like this. Where is it, those arrows? Oh. There are high possibility that we can push the market to the upside until we approach this level, or we can broken here. But for now, there is nothing that is clear on the daily time frame. What I see, I will look at the zones always. I will just look at the zones. Why I look at the zones is where that you're going to take your profit. The zone is where that you are going to taking a profit on that zone. Always watch the zones. So expectation for me, what I'm expecting on the Euro USD, I'm expecting the market to push to the downside until we approach this level. But let's see, because of we're still on the bigger time frame. So my expectation right now, what I'm expecting on the market to happen, I'm expecting the market to come back on approach this level. Once the market approach it's already approached it. Once the market it approach that level, is where that I supposed to take my entry here to expect the market to broken this level impulsive, because of once the market is impulsive and just fetch on that zone, the market is going to give you a pullback. To broken a stronger zone impulsive, the stronger zone always we have to broke it impulsive, not correctively. So my expectation on the Euro USD, there are high possibility that we can find ourselves moving, ranging, having a ranging market like this before we can broken. It's either if we're not gonna have a ranging market, there are high possibility that we'll just broken impulsive immediately. So this is my expectation. My expectation on this pair, I'm expecting the market still to push to the downside. So still to push to the downside. Still pushing to the downside. Let's just move to an H1 because of H1 is main use for entry. So there are high possibility that we are going to create M formation and push to the downside. This is my expectation because of the overall structure is it's a sell. Don't confuse yourself by looking the pattern. The market will show you the pattern and showing you the pattern that there are high possibility that we are going to push to the upside for long term. Only to find out you forget what the biggest time frame told you. Once the biggest time frame tell you that the long term of that pair, you are supposed to expect the market to push to the downside. You are not going to be calling at the wrong side. So this is my expectation on the Euro USD. I'm expecting the market to still push into the downside. Let's just close it and join again on the same link because we left it with a 1 minute. And then for the next session, I'm not going to communicate too much. I'm going to just analyze the market. I already did the analysis yesterday. That's why you just see. So once I analyze the market, I'm just showing you how I got that buy or that sell. Because yesterday, some people, they saw me the time I was doing the analysis. Okay. Let's just analyze the another pair, which is USDJPY. USDJPY, I'm not gonna clean anything. I'll just explain and move forward. So this is my expectation. This is my major support. And then if you can check, I have a major resistance here. So my expectation, I'm still expecting a UJ to buy. Okay. And then we are moving to a weekly time frame. And then once we are moving to a weekly time frame, we'll start to realize that on the weekly time frame, we have the previous zone. Just here, I didn't just mark it. Let's just move to the daily time frame. On the daily time frame, we have the previous zones. That's why it's very, very important to mark the previous zone so that we can understand what is going to happen and what it cannot happen. It's very, very absolutely important. So if we can just check very well, the market have been moving impulsive, correctively, impulsive, correctively, and impulsive, correctively, impulsive. So right now, what we are expecting to happen, I'm expecting a UJ to still push into the downside little bit, to push to the downside little bit, to come back and fetch this level. After fetching this level, we're going to catch another impulsive to push to the upside. Let's just move to a daily time frame, a H4 time frame. So if we can just check very well on the H4 time frame, you'll realize that the market have been moving impulsive, and then once approach that level, moving correctively. So I'm still expecting the market to move, to push to the downside, where I will be expecting is either we are going to take opportunity here once the market approach broken that level. That means our last entry that we are expecting to take it here to swing is this level. So we'll see how the market is going to react to us. So this is the same thing that I was explaining to you. This is what I'm expecting. It's either we're going to break it, bounce it here. To bounce it here, let me just give you a small tips what it can happen. Once the market approach that level, it can just go and fetch that level with just a spike, fetching that level with a spike. After fetching that level, because of the nature of the market, if the nature of this pair, most of the time, if you can check, you get opportunity with the pin bar. That's why I told my students to go and watch one pair and study one pair to understand the nature of that pair. I'll give you a strategy that you can use it for that pair. So once the market just fetch it, and then you realize that the market is going to reject, close it. Now, then you can start to open the market buy. Without the market come and hold the price it here, just to go and fetch the same thing that it happened here. Just go and collect and move on. Continue the direction. This is my expectation on the UJ. I'm expecting the UJ to push to the downside like this, so that we are going to catch another swing move to push to the upside. So that's my expectation on the GBP. USD JPY. I'm not gonna just lean my analysis now. I'm not gonna just lean it right now. I'll just work on the previous analysis, explain from the previous analysis. So we started to realize one thing on that pair. We are on the monthly time frame. As we are on the monthly time frame, let me just delete this thing. On the monthly time frame, we realize that the market is moving like it was been moving like this with a channel. Once the market is moving with the channel, if you can just check very well, impulsive, correctively impulsive, and giving us a continuation pattern, which is corrective and impulsive, and create a new high and push to the downside and come back, create a new lower. After creating a new lower, the market give us another impulsive leg. The market started to realize that here the chart was not balanced. The market pushed to the downside and create what? A double bottom. After creating a double bottom, the market pushed to the upside impulsive. And then you started to realize that why I say that the market always moving impulsive correctively. On that correctively is where that we are going to catch an entry. If it's a taxi, it's a bus. You wake up later, you just hawk, you'll catch another bus. You fail to catch this one, the market is going to give you impulsive, you'll catch another bus. Always the market give you an opportunity, and then within that channel we'll realize that the market is giving us a major resistance, a major support level, which is supply and demand. Within that that channel, you'll realize that we have this channel, a ranging market. Within the ranging market, you'll realize that we have another channel within this channel. Within this channel, you'll realize that we have another channel inside. That's why I said the strategy that I'm using, it's a top-down analysis. You go deeper from the biggest time frame so that we can understand the long term, what is going to happen. That's why even once you can take a trade, you can still hold it for long term. If I remember well, the beginning of this year is where that USD JPY it bought. If I was holding that time, I supposed to reaching a level that I didn't know that right now I supposed to reach it, but I didn't hold. I remember I bought a USD JPY the time it was started to buy. And then it started to push to the upside. It was a fundamental, which is NFP. And then the CPI, it gives us another impulsive to push to the upside. So that's the reason why it's a key to understand, to follow the top-down analysis, to watch the bigger time frame, because of the bigger time frame will never lie to you. So if we can just check very well, we find a pattern within the pattern, the channel within the channel is where that we'll finding ourselves catching an entry into H1 and 15 minutes. Because of H1, it's working with a 15 minutes. Let's move to a weekly time frame. Okay, so within that channel that we are focusing, this is a channel that we have. Now our focus is in this channel. Let's just check what's happened on that channel, what's going on. Within that channel, you realize that the market, it managed to give you a continuation pattern, to give us another impulsive move to push to the upside. And then we're still under the channel at the same time. And then if you can just check very well, the market make impulsive and correctively started to react, talk with the candlestick, because of our language is the candlestick. Let's move to a daily time frame. On the daily time frame, everything is clear. The market is just pushed to the downside to come back and fetch this level, a previous level. Remember, the market will never give you a clear pattern. The market will never respect exactly, because of us, we are programmed like this. That's why I said there is a disease that people need to be healed. People are seeking, they need to be healed. What the people that are expecting, I'll just show you right now. People, they are expecting like this, the market to do something like this. Let me just do small prediction here, and then bounce exactly in here, and the market give you an impulsive and come back, bounce exactly on the previous zone, exactly on that point here, on that point. This is how people, they are programmed. They are forgetting one thing, what the market it can do, because of the market makers, they know our mindset, they know what we know. Even the brokers, they know what we know. So every time, once you said, okay, I'm going to buy here, okay, you said I'm going to buy here, and then I will maximize my loss. I want to catch a sniper entry. You want to catch a sniper entry. Yes, you catch a sniper entry. And then after that, you realize the same thing that I was explaining to you. The market is gonna go fetch a little bit and started to reject and close it here. Where you bought, hit your stop loss and come back, close it where you bought, and started to give you an impulsive move to push to the upside. Is a disease that people need to be healed. As you can see here, they just broken and reject. So what we are expecting, let's just move to an H4. You'll realize that the market, it was moving on this level. The market, it ended up creating a channel here. After creating a channel, it broke an impulsive here. So the possibility that we're expecting the market to come back on this level, to fetch and retest, and expecting to broken this level, this trend line, impulsive to push to the upside. This is my expectation on the USD CAD. The pair that I'm gonna just analyze it's a indices. Because of indices, I didn't do the setup. Others, I will just explain. So what's going on here? You'll realize that the market itself, it managed to give us a triple touch here at the top. And then at the triple touch, before the market, it managed to create a high. And then the market broken that high, create a new high. This is a previous level. That I've been talking about. This previous level, I've been preaching. The market is going to respect this level before we can impulsive to the downside. The market is supposed to respect that level. People, they didn't hear me. People, they hear me when I talk about on the Zoom meeting, but they don't capture on the mindset. They didn't stop what I'm saying. So you'll realize that there is things that was happening. After that, the market was playing on the neckline. This is a neckline. You will realize that this is the information. Within the information, market broken and come back, playing on the neckline, bounce on the neckline, bounce on the neckline, bounce on the neckline, and then broken the previous zone impulsive because of is the strongest zone. If you can check from the previous, look at from the previous, always the market respect the previous zone. You'll realize here, you'll realize here, you'll realize here, you'll realize here that the market, this is the strongest zone. You see? You see? Always the market respecting the previous zone. Sure, my guy, thanks. So always you must be aware. Let's see. Let's see what is going to happen, what our expecting. It's just for now, it's a must to do a market breakdown, but that's why some other pair I just canceled the setup, but on that other pair I didn't cancel the setup because I saw that it take time. I did the two setup. So the things that you must be aware on the gold, because of it's a new candlestick that is going to happen. We don't talk about what we they told us. I talk about the experience. I talk about the experience. What is going to happen? Most of the time, the market, it can sell. Yes, it's going to sell. But you'll realize that before the market, it can sell. Before the market, it can sell. Before the market, it can sell. Because of it's a new candlestick. The market is going to buy. Buy. After the market buying for that time, for a short period of time, you'll realize that at the end of the day or after 2 days, the market it will start to reject and still continue the trend. Continue the trend. If you can check very well in the daily candlestick, I give you a homework. Look at a daily candlestick once the market open. But you need to check at the zone. You need to check the zone first of all. But it's fine. It's fine. It's just some other things I can't teach. But I'll just teach on the mentorship. Maybe sometimes I'll just teach. But it's fine. Let's just move to an H4 time frame. So my expectation, I'm expecting the market to come back and push to the upside. To come back and push to the upside so that we can catch another swing move to push to the downside. But still, you must be aware that what I'm expecting, it cannot happen exactly. It can just come, the market push to the upside like this. Push to the upside and fetch this level. And you realize that the market is started to sell. But according to my experience, where you know that you're supposed to sell, the market is going to just break it. Remember, we are fighting with a $6.6 trillion. The market is going to do what? It's very, very important to understand the candlestick. At the zone, the market will just break it and start to reject and close it and continue. There is no way that the market will never give you a candlestick. If there is someone who can tell me that no, Mokhosi, the market it can move without giving a reversal to candlestick, I need that person. It's a lie. It cannot happen. It can't at all. Unless I don't understand the top-down analysis very well. It can't happen at all. That's why I said H1 is working with the 15 minutes. It's fine. Let's just move to H1. So this is my expectation. I'm expecting the market to buy a little bit. It's either we are going to pounce it here or pounce it here. We'll get the result from the market. We don't know. But the expectation, we're still expecting the market to sell. Okay. Let's just move to the indices, guys. Analyze the NASDAQ. I remember I did the setup last. Just I don't want to cancel this thing. I'm busy at the same time writing the but that one is fine. It's fine. I can cancel it. So right now I have my highest level, which is my major resistance. I have a lowest level, which is my major support level. Remember, this is an index. This is the company of people. The Nasdaq, which is a NAS 100. The reason why they call it a NAS 100 because of the company 100. There is no one who can want his company to go down. That means if Nasdaq is gonna sell strong, there is a problem that was happening on that one of the company or a few of the company. Indices, it's a shares, it's a stock market, it's a one-way market. More opportunity for buying, short opportunity for selling. I don't know. If you can just check very well, always from the previous, I will be say 1,000 years ago. I don't know, guys. If you can just check very well, always indices is a one-way market. Once we talk about indices, we talk or the shares. It's a one-way market. So this is my major support level. This is my major resistance. There is nothing that I can tell you. There is nothing that I can show you right now. Let's just move to a weekly time frame so that we can see a different. At the weekly time frame, we started to see a different. We started to see that we can put the trend line here. We can put this here. But before, we was not aware. Let's move forward. So I realized that the same thing that was happening on the USDJPY is the same thing that it happened on the Nasdaq. If you can just go and check the a chart of USDJPY, you realize that Nasdaq it bought this year here, same as USDJPY, same pattern that was happening. It just in a smaller time frame they are different, but we start to realize that on the bigger time frame they are the same. That's why I told my student, stay away from this thing of correlative. Use a correlative on the fundamental. It's fine. It's just I'm gonna shift on the market breakdown. I'll find myself teaching, but it's fine. Let's just analyze the market. So we started to realize that we have our major support level. This is my major resistance. On the major resistance, we started to realize that the market was giving us a W formation on that level. And on the neckline, the market, it managed to do what? Respect the neckline, retest it and give us another impulsive. Always, what you have to know, keep it in your mind. The market respect the previous zone. We buy at the zones, we sell at the zones, we take the profit at the zones. So we have this zone now. We have this zone right now. We have this zone. But there is nothing that is clear. We see information, but we are not sure about that information that the market it can sell. My understanding, I will be saying that Nasdaq is going to buy. Nasdaq is going to buy. This is my expectation, but we are going to sell for short term. And we are going to continue the buy. But let's see. Let me just remove this zone and move to a weekly time frame, a daily time frame. Always the market respect the previous zone. So you'll realize that the market have been giving it as impulsive. At the same time, the market started to create a rangy market. Within the ranging market, the market started to talk. what I can tell you, what is going to happen, there are high possibility that we'll find ourselves, the market creating something like this, so that we can catch more buying opportunity to continue with our trend. To continue with our trend. I have this level. This is my expectation. Let's move to H4. Let me just delete this prediction. And I will take some other price here and use it. Where is it? Where is it? Where is it? Okay, let me just take this thing. Take it from here. This is my expectation on the Nasdaq. I'm expecting the Nasdaq to push a little bit to the downside, create a W formation, which is a pattern, the reversal pattern. Remember, after the reversal pattern, the candlestick pattern, a confirmation to tell us that it's the right time to reverse so that we can buy. This is my expectation on the Nasdaq. I'm expecting the Nasdaq to buy. I'm expecting the Nasdaq to buy. This is my expectation on the Nasdaq. Let's move to H1. Maybe something will be clear. Nothing changed. I'm still expecting Nasdaq to do what? Nasdaq to buy. I'm still expecting Nasdaq to buy, to push to the upside. Let's just move to German 30. German 30, I did the setup. The setup is here. This is what I'm expecting to happen on the German 30 because of right now, if you can just check very well, always the market respect the previous zone. I'm expecting the market, this is because of we have 1, 2 touches. I'm expecting the market to do what? To give us another impulsive to fetch this level to buy. Yeah, hey guys, I don't know. Okay, can you please analyze a US30? Okay, let me just do a US30 for the last time and I will just close the live. Before I close the live, I have a what we call it social trading, which is copy trading. It will start next week, not this week, next week. So make sure you funded your account 1.5 and then you send me a screenshot so that I can add you on the group. The first target that you are going to approach, we are going to target the maximum deposit. After targeting a initial deposit, this is where that we can say, let's take a risk. Let's trade to risk because of we withdraw how the initial deposit. If you are interested, you let me know. Let me know on time. Don't tell me before because of the more that you're gonna tell me before, it's going to be a problem. Some other people maybe already made it 1K and then you came late. You see, it's gonna be a problem. So a German 30, guys, I also did the setup previous days ago. If you remember very well, the time I did the market breakdown, I told you that this is what is going to happen because of you realize that the market is moving with the channel. The market is moving with the channel. Within the channel, we have the channel, the pattern that is giving us a buying opportunity. At the same time, I'm still expecting the German 30, US 30 to our target is here, and then our target, another target is here. Because of, let's just move to another time frame because of there is nothing clear. Right now, we are at a zone. As we are at the zones, I'm expecting a little bit pullback so that we can push the market to the downside. Something like this. To push to the downside. This is my expectation. Let's just check an H4. This is my expectation. This is my expectation, guys. I don't want to lie. This is my expectation. I'm expecting the market to push a little bit again so that we can swing to push to the downside. I think, guys, I'm done for the day. If you have any question, you can ask. If you don't have any question, let's call it a night. Yes, I will send the setup in our Telegram channel, and then the video I will send the link from my YouTube channel. You will get the market breakdown session at the YouTube channel. Any question? Okay, guys, let's just call it a night. Tomorrow is the trading day. I was not available during the week. Last week, I was very, very busy. So I'm out, guys. I'm out. The book will be released when the book soon it will be released. It just I'm still wanted to add some other information. If you saw the time I was on the US date, there is something that I'm still working on it right now. I'll just show you right now. But the book is coming. The book is coming. The book is coming. You see. So I was still busy writing some other things. I'm still working on that book. I'm still working on that book. So the book will be released soon. But it's not gonna be released first with a PDF. It's gonna be a paperback, which is a book, original book. So this is what I was busy doing today, because of I can't write just book in a single day. I must just write it and then focus. Guys, let me just close. Soon it will be released. I will let you know. Thanks, guys. Thanks, brothers. I actually want to come to you. No problem. You can just text me. I'm available right now. You can text me before I sleep. Let's call it a night, guys. Thanks to be in the part of this live Zoom meeting. Let's just call it a night.